Very good morning to all of you, my friends. Welcome back. I hope you guys are doing good. And as I told you guys, I hope you guys are prepared with standard costing. So in the previous two sessions, we discussed process costing and service costing. Now today we are starting with standard costing, again a very important chapter from examination point of view. You'll find a question of standard costing in every attempt. In every attempt, you'll find a question on standard costing. So before starting with the discussion, good morning, Mehak. Before starting with the discussion, if you guys have any conceptual queries or any queries related to the questions that are there in the study material, you guys can just post your queries. As I mentioned in the previous class, also these sessions are revisionary classes wherein and further, if there are any queries, then you can speak to the faculty. So if you guys have any conceptual queries or any queries related to any questions in the study material, just post your queries. I'll be taking a brief about the concepts that are covered in standard costing. Thereafter, I'll be discussing few questions. I have uploaded few questions from past RTPs and MTPs. So I request you guys to please download the questions what I have provided. I think I have provided 4 questions. All are related to missing figures. So once the concepts are over, I'll be discussing the questions from the material what I have provided. For conceptual part, I'll be taking few questions from the study material. So let's start. When talking about standard costing, it's a part of management accounting and it assists management in decision making. We call standard costing as variance analysis also. Herein, we do calculate the variances and we do figure out that what are the reasons behind these variances. So herein in standard costing, we'll be calculating the variances. Now how it works is, sales can be divided. Profit, how come we derive profit? By sales and cost. So if there is any change in sales, there will be a change in profit. And if there is any change in cost, there will be a change in profit. So there are the two factors that are responsible for calculating profit. So wherein if there is any change in sales, the profit will affect. And if there is any change in cost, the profit will affect. Now, when talking about standard costing, how the variances are calculated, see, every company do set up target, benchmark, standards at the beginning of the year. And at the year end, when the actual results are out, they do compare these targets set with the actual results. So there will always be some difference between the target set and the actual result. We call them as variances. So these variances can be either due to change in sales or change in cost. When talking about cost also, there are 3 major elements of cost as you guys must be aware of. That is material, labor. So these are the 3 major elements of the cost, that is material, labor, overheads. Overheads can also be further classified as 2 parts, fixed and variable. So at the year end, as every company do calculate variances, so we'll be calculating the variances of all these things. However, from examination point of view, profit variance is not covered, sales variance is not covered at IPCC level. However, we have to calculate material, labor, fixed overhead, and variable overhead variances. So at IPCC level, we'll be discussing four variances, that is material variance, labor variance, fixed overhead, and variable overhead variances. So this is all what we'll be discussing today. It's only one session on standard costing, so we have to cover all the variances. So we'll be starting without wasting time. We'll be starting with material variance. Now, as I've discussed in my regular batch also, there are no formulas in standard costing. It's all concepts what we have learned during the regular batch. So I'll be covering the concepts part only, and thereafter I'll be writing the formula for your references. So let's start with material variance. When talking about material variance, the basis of comparison is output. So to calculate the material variance, the output should be same. That is, the output of budgeted data and actual data is same. Then only we can calculate the variances. So let's say the budgeted data is given in the question. Let's say the budgeted data is given in the question wherein it's given that we are using two types of raw material and the quantity is, let's say, 60 and 40. Total inputs are 100. Normal loss is, let's say, 20% of input and my output is 80. So this is the data that is given in the question that is related to the budgeted data. As far as the budgeted price is given, it is given in the question, let's say 5 and 4. That is, material X is to be purchased at the rate 5 and material Y is to be purchased at the rate 4. Now, when talking about the actual data is also given. Let's say 700 kgs of X was used, 300 kgs of Y was used. Total inputs were 1000. 30% was normal loss, so 300 was my normal loss and 700 was my output. The price at which actually I purchased X was 4 and Y was at the rate 5. So herein the cost was 2800 and herein the cost was 1500. So total it is 4300. This is how the data will always be given in the question, that is budgeted data and actual data, if the question is simple and straight. If the question is simple and straight, the data will be given as follows, wherein this will be the budgeted data and this will be the actual data. The question will now ask you to calculate the variances. The question will now ask you to calculate the variances. Now see, as I mentioned that in material variances, the basis of comparison is output. Now this 60 kgs is used of X for 80 units of output. However, my actual output is 700. So we can't say that this 60 kgs we were supposed to use and 700 kgs we actually use, because herein from 60 kgs we are getting an output of 80. However, when we are using 700 kgs, the output is 700. So these two figures are not comparable. The reason is what, that their output is not same. So we have to make it comparable. Let's take a very small example wherein, let's say budgeted data is given, wherein from every 2 meters we manufacture one shirt. Now actually we used 11,000 meters to manufacture 5,000 shirts. So can we say these two datas are comparable? No. Can we say that we were supposed to use 2 meter, we actually used 11,000 meters? So 10,998 meters we used extra? No. Because here in 2 meters we were using and we were manufacturing only one shirt. Herein we are using 11,000 meters, but we are manufacturing 5,000 shirts. So these two datas are not comparable. So we have to make it comparable. So see, one shirt, 2 meters. So 5,000 shirts, how much quantity we should have used? 10,000 meters we should have used. And we used 11,000 meters. 1,000 meters extra we use. So this is the correct thing. So we can't compare 2 meters and 11,000 meters. Why? Because 2 meters is for one shirt of output and 11,000 meters is for 5,000 shirts of output. So these two datas are not comparable. Now, so herein also 60 kgs we are using for 80 output. However, my actual output is 700. So we have to calculate this figure. So herein one shirt, 2 meter, 5,000 shirt, 10,000 meter. Similarly, 60 kgs for 80 output. So for 700 output, how much? Can you guys tell me? Can you guys tell me? Yes, everyone. I hope the board is visible to all. Admin sir, my board is visible. Admin sir, the board and letters are visible. Admin sir, मैं बोल रहा हूँ बोर्ड दिख रहा है, लेटर्स दिख रहे हैं. Okay. So many students posted the answers. Amar, I think you are checking over, you are watching the lecture over phone, or there are some connectivity issues from your end. Please refresh your connection. Shravan, Shravya, it is incorrect. I'm surprised. Pooja, it is incorrect. Mehak, it is correct. Yes, Gayatri, what's the answer? Kambira, you are regular. What's the answer? Arun, Garv. So here in 60 kgs for 80 output. So for 700 output out, how much? So we calculate standard quantity. We calculate standard quantity for X, 60 input for 80 output. So for 700 output, how much quantity we were supposed to use? 520. So for 700 kgs of output, how much quantity we were supposed to use? 525 kgs of X at the rate 5. So the expenses will be 2625. So similarly for B also, 40 kgs of input for 80 output. So for 700 output, how much? So in short, what I want to say is that for 700 units of output, we were supposed to use 525 kgs of X, 350 kgs of Y. Total cost was supposed to be 4025. However, my actual cost is 4300. In short, I repeat again, 700 units बनाने के लिए खर्च कितना होना चाहिए था? 4025. But how much we actually spent? 4300. So what is the difference in total cost for 700 units? We were supposed to spend 4025. However, the amount what we have actually spent is 4300. So how much extra we have spent? 275. So it's adverse for the company. So this is what we call as material cost variance. This is what we call as material cost variance. Alternatively, we can calculate material cost variance as, see, for X, we were supposed to use 525 kgs at the rate 5. However, we use 700 kgs at the rate 4. For Y also 350 kgs we were supposed to use at the rate 4. However, we use 300 kgs at the rate 5. So this is 100 adverse, this is 175 adverse. Therefore, the total will be 275 adverse. So this is how the material cost variance will be calculated. So again, see what we have, again, very important guys, I have not discussed any formula, I have just discussed the concept that the name says material cost variance. That is the difference in total cost. So for 700 units, how much we were supposed to spend? 4025. But how much amount we have actually spent? 4300. So how much extra we spent? 275 extra. So it's a loss to the company. That's why this variance will be adverse. Now see, this material variance is cost variance talks about the difference in cost. Now this total difference in cost is because of two factors, quantity and price. Because see, quantity into price minus quantity into price minus quantity into price. So there are two factors that are responsible for this variance. First one is the price and second one is the quantity. So let's start with price first. How much it is due to price and how much it is due to quantity we will be calculating. So herein it will be material price variance. And when talking about quantity, it's the usage of quantity. So we call it as material usage variance. So now because of the price, let's calculate material price variance. So it talks about the difference in price. So how much price we were supposed to pay? 5. How much price we actually paid? 4. Into the quantity, we'll be taking actual quantity. Since the price variance basically reflects the work done by the purchase manager, so the performance of the purchase manager will be evaluated on the basis of the quantity that is actually purchased. I have discussed this in detail in my regular batch, so you can check out my regular batch wherein there are 4 sessions on standard costing and I have discussed all these concepts in detail. So herein 5 minus 4 into 700 and 4 minus 5 into 300. So this will be 700 favorable. This will be 300 adverse. So net it will be 400 favorable. So this is all what about price variance. Now when talking about uses, see price, the price we were supposed to pay, the price we actually paid. So this is how we calculated price variance. Now usage, the quantity we were supposed to use minus the quantity we actually used. So quantity we were supposed to use of X is 525. The quantity we actually used is 700 into the price is 5. Now, Herein, we'll be taking the standard price. Why I have taken the standard price, that also I have discussed in my regular batch. So very important, guys. Price variance, the price we were supposed to pay and the price we actually paid into actual quantity. Now, when talking about uses, the quantity we were supposed to use minus the quantity we actually used into the standard price. So these 2 points are very important. I've discussed why I have taken this actual price and standard price. See, formulas are also given, but I personally suggest you guys to refer the concepts rather than memorizing the formulas. Anyways, for the Y part, 350T quantity we were supposed to use. The quantity we actually used is 300 into the price 4. This is 200 favorable. So this is material usage variance. Now see, the overall difference is of 275. That is adverse. Here in 400 is favorable and 675 is adverse. So net it will be 275. 400 is favorable, 675 is adverse. So net it will be 275 adverse. So very important, guys. Material price plus usage will be material cost variance. Material price variance plus usage variance will be material cost variance. Very good, Mehak. Now, when talking about material usage variance, there is an overall difference in usage. Now, there are the two reasons why there is, difference in usage. See, herein, the difference in uses can be due to change in mix. See, herein what we can see is that the company has targeted a mix of 60s to 40. However, the actual mix is 70s to 30. So mix can be one of the reason that there is a difference in usage. So we calculate material mix variance. We do calculate material mix variance, that what should be my mix and what is my actual mix. What should be my mix and what is my actual mix. So see how much are my inputs? 1000. This 1000 input should be in the ratio of 60 is to 40. This 1000 input should be in the ratio of 60 is to 40. That is 600 is to 400. We call it a standard mix. That is actual input total should be in the ratio of 60 is to 40 or 525 is to 350. Their ratio is same. 60 is to 40. So this will be, and my actual quantity is 700 and 300 into 5 and 4. So it will be 500 adverse. So this is all what about mix variance. Now next is material yield variance. It talks about the overall usage. Material yield variance talks about the overall usage. So for 700 units of output, what should be my overall usage? 875 kgs. And what is my actual usage? 1000 kgs. Into the price will be taking, see overall there is a difference of how many kgs? 125 kgs. Now, since the difference is of 125 kgs, but we have to express all these variances in monetary terms, so we have to take the price, standard price. So it will be 5, 4, or 4.5 or weighted average. So the best approach is weighted average price. So into how we will calculate the weighted average price? 525 into 5 plus 350 into 4, total 4025 divided by 875. So it will be 575 adverse. Now, very important, guys, material mix plus yield is usage. See, 100 adverse plus 575 adverse is 675 adverse. 675 adverse plus 400 favorable is 275 adverse. So, in short, first point, price plus usage is cost, and mix plus yield is usage. So, this you can do for verification to check whether your answers are correct or incorrect. So this is all what about material variances. So first thing what you have to do in material variance is to check the output. If the output is same, if the budgeted output and actual output are same, if budgeted output and actual output are same, no need to prepare revised standards. Straight away start calculating the variance. But yes, if there is a difference in budgeted and actual output, that see herein the budgeted output is 80 and actual output is 700. So herein there is a difference. So that's why we prepare revised standard, wherein we'll be converting this data of 80 units of output into 700 units of output. Now, once the 700 units data is ready, we will compare this budgeted data with actual data and we will calculate the variances. Now, see, as far as the formulas are given in the study material, so see, you can frame the formulas also. 525 into 5 is what? Standard quantity into standard price, and 700 into 4 is what? Actual quantity into actual price. So for material cost variance, it is standard quantity into standard price minus actual quantity into actual price. When talking about price variance, the price we were supposed to pay was standard price. The price we actually paid was actual price. Into we will take the actual quantity. For usage also, the quantity we were supposed to use was standard quantity. The quantity we actually used was actual quantity into standard price. Next is mix variance. What should be my mix? That is standard mix should be my mix that I have calculated. Minus actual mix is equals to actual quantity into standard price. Now for yield also there is a formula I have just calculated in a very simplified way. There is a formula also wherein standard quantity minus standard mix into standard price. So these are the formulas, but I personally suggest you guys not to memorize the formula, rather focus on the concepts that will help you a lot. So giving you 2 to 3 minutes time to copy everything. Anyone with any doubts or queries? Yes, Gayatri, Pooja, Arun, Kambira, Prince, Mehak, Shravya, any doubts? Garv, any doubts? One thousand is in the ratio of 60 is to 40. 1000 is in the ratio of 60 is to 40. So 1000 into 60 by 100 and 1000 into 40 by 60 plus 40 is what? Total is 100. Na? So 1000 into 60 by 100, 1000 into 40 by 100. I hope it is clear, Arun, now. So next, let's start with labor variances. Let's take a question from the study material for labor variance. I request you guys to open your study material. I'm discussing the question from practical problem. One second. And taking illustration number 7, I request you guys to open illustration number 7. Not from practical problem, illustration number 7, page number 13.30. It covers all the variances. So let's start with illustration number 7. So NPX Limited uses standard costing system for manufacturing of its product X. Page number is 13.30. So NPX Limited uses standard costing system for manufacturing of its product X. Following is the budgeted data given in relation to labor hours for manufacture of 1 unit of product X. So budgeted data is given for every unit of product X, wherein the budgeted hours are given, the budgeted rate is given. Actually, they manufacture 10,000 units and the data is given. The actual idle hours are also given in the question, wherein 500 for skilled, 700 for semi-skilled and 800 for unskilled. Total it is 2,000. You are required to calculate the labor variances, and B part, wherein there is some change in the question. So I'll be covering only A part, wherein I'll be calculating all the variances. Rest B part is very simple. Once you are done with the A part, you can easily solve part B. So let's start with illustration number 7. Budgeted data is given. Actual output was 10,000 units. Actual hours are 18, 33, and 58. The rate is 7, 3.5, and 4. So this is the budgeted data and actual data given. Now herein, just like material, in labor also the basis of comparison is output. Now see, budgeted data is given for 1 unit, wherein actual data is given for 10,000 units. So my first question is, are we required to prepare revised standard to all of you? Yes. Are these two figures comparable? Yes or no, guys? Very good, everyone. We have to revise the figures. So can anyone tell me what are the revised hours? 1 unit, 2 hours. So for 10,000 units, how much hours were required? Very good, everyone. Prince Nayak, it is 20,000, not 2,000. So 1 unit, 2 hours. So for 10,000 units, 20,000 hours. So herein it will be 30,000, and herein it will be 50,000. Total hours will be 1 lakh. Rate again same 6, 4, and 3. So this will be 1,50,000, 120, 120. Total will be 3,90,000. Anyone with any doubts or queries till now? Now, here in this question, some additional information is given as regards idle hours. See, if the question ends here, then we would have calculated in the same way the way we have calculated the material variances. No change in material and labor variances. However, there is a twist in question wherein idle hours are also given for skilled, semi-skilled, and unskilled. Idle hours are given. How much are my idle hours? 500, 700, 800. Now see, these are the hours, actual hours, what we are paying for, and these are the idle hours. So herein we can easily calculate the hours actually worked. The hours what we worked actually. So herein 18,000 minus C, 18,000 for 18,000 hours we are actually paying. However, there is an abnormal idle hours. We have to pay for abnormal idle hours also. So hours actually worked were how much? 18,000 minus 500. It will be 17,500. 33,000 minus 700. It will be 32,300. 58 minus 800. It will be 57,200. Total it will be 1,07,000. So when idle hours are given, first thing what we have to do is we have to calculate the actual hours worked. These are the hours what we are actually paying. Of this, idle hours are given, so we will be able to calculate actual hours worked. Now let's start with the calculation of variances. Just like material, it's labor cost variance. It is 3,90,000. Same, just like material only, no change. 3,90,000 minus 4,73,500. We'll get the labor cost variance. So this will be 83,500 adverse. We can calculate it in other way also. 20,000 into 6 minus 18,000 into 7. 30,000 into 4 minus 33,000 into 3.5. 50,000 into 3 minus 58,000 into 4. The answer will be the same. So again, just like material standard quantity into standard price minus actual quantity into actual price, here in labor also standard R into standard rate minus actual R into actual rate. Herein we used to calculate material price variance. So in labor, it is labor rate variance. Instead of price, it will be labor rate variance. So the rate we were supposed to pay is 6. The rate we are actually paying is 7. And herein we used to take actual quantity. So here we take actual hours. So this will be 18,000 adverse. So this is the way we will calculate the labor rate variance. Just like material price variance, we have calculated the labor rate variance. Anyone with any doubts or queries? Sorry, I think. Thank you so much, Pooja, Mehak. Now, herein, there is a twist, as I mentioned, that idle hours are given, so we'll calculate idle time variance. So 500, 700, 800. See, this is always a loss to the company. We'll be taking the standard rate. So the variance will always be adverse. So this will be 3000 adverse, 2800 adverse. So labor rate, labor time, idle time variance. Now, herein very important, guys. Again, the concepts of material and labor are altogether same. The key is that if there are idle hours, then there is a small twist. That is, we have to calculate idle time variance. Now, see, the difference is of 1 lakh minus 1 lakh 9,000 hours. The overall difference of hours is 1 lakh minus 1 lakh 9,000 hours. Now, out of this difference of 9,000, 2,000 difference is of idle time that we have already considered separately in idle time variance. See, the difference is of 9,000 hours. Of this, 2,000 hours is because of idle time that we have already considered in idle time variance. So now we are left out with a difference of how much? Only 7,000 hours. That is 1 lakh minus 1 lakh 9,000 hours. Of this 9,000 hours, 2,000 we have already considered. So we are left with a difference of 1 lakh minus 1 lakh 7,000 hours. So here from 9 onwards, that is from labor time variance. See herein, instead of usage, we'll be calculating labor time variance. Wherein time variance will not be calculated using these hours. We'll be calculating using these hours because the difference of idle time is already considered separately here. So herein, for skilled, semi-skilled, and unskilled. 20,000, 30,000, 50,000 minus not these figures, but these figures, that is 17,500, 32,300. So this will be 15,000 favorable. This will be 9,200 adverse. So net it will be 15,800 at. So this is the way labor idle time. Again, the calculation is same, just like material variances. So the difference in the question is because of idle hours, there is a difference. Now see here and again two parts. In material here it was material mix variance, so herein it is labor mix variance. Now the actual inputs, actual hours total were 1,07,000. It should be in the ratio of 2:3:5. This 1,07,000 should be in the ratio of what? 2:3:5. So 1,07,000 into 2 by 10. 21,400. 32,100. 53,500. Minus the actual is into the rate is 643. This is 800 adverse. $11,100 adverse. So that is 11,500. The calculation of mix is also same. Now herein the last was material yield. So it will be labor yield, or we can call it as efficiency also. So these 10,000 units should be manufactured in how many hours? 1 lakh hours. We took how much hours? 1,07,000 hours. How much hours extra? 7,000 into the weighted average rate. In the same way, we calculated material yield variance. Herein again also mix plus efficiency is time. Time plus idle time plus rate is cost. Once you are thorough with the concepts, you can easily frame the formulas. So anyone with any doubts or queries, you guys can please speak to me. I request you guys to copy everything. Again, the presentation is the key. So rate also standard rate minus actual rate into actual hours paid. See, these are the hours paid, these are the hours worked. Idle time variance. idle hours into standard rate. Labor time variance, standard hours minus actual hours worked. Actual hours worked into standard rate. Labor mix variance, standard mix minus actual hours worked into standard rate. And herein also standard hours minus standard mix into standard. So again, formulas are not important. The concepts are important. So if you guys have any doubts or queries, you guys can please post your queries. I'm done with the explanation of this question. Shravya, very simple. For manufacturing 10,000 units, how much hours we have to work? 1 lakh hours. But to manufacture actually 10,000 units, how much hours we actually worked? 1,07,000. So 7,000 hours extra we work. Now we have to apply the standard rate. But which rate to apply? 6, 4 or 3. See, these 7,000 hours extra we work can be of skilled also, semi-skilled also, unskilled also. So better we are taking the weighted average rate, that is 3,90,000 divided by 1 lakh. The calculation is same, just like material yield variance, Shravya. Yes, Kambira, Garv, Avjeet, Mehak, any doubts? Prince? So now let's proceed further. For fixed overheads also, let's take a question from study material. I'm just taking the basic question only, then we will discuss some advanced question after finishing fixed and variable overheads. So let's start with practical question number 12. Practical question number 12, I'm discussing fixed overheads. I request you guys to open practical question number 12, page number 13.62. Now, guys, do make a note of it that whenever you find a question on fixed overhead, try to arrange it in tabular form. See, in most of the cases, the question will be given in tabular form. However, if it is not given, then we have to arrange it as follows. That is budget and actual. So let's start with this question. The following data has been collected from the cost records of a unit for computing the various fixed overhead variances for a period wherein number of budgeted working days are 25, budgeted man hours per day is 6,000, output budgeted per man hour in units is 1, fixed overhead cost as budgeted is 1,50,000, actual number of working days are 27, actual man hours per day are 6,300, actual output per man hour in units is zero point 0.9, and actual fixed overhead is 1,56,000. So let's start with this question. So let's start one by one. Wherein days? Let's start with days. The budgeted days given are 25, and actual days are also given, that is 27. Now next is hours, wherein it is given budgeted man hours per day is 6,000. And the number of days are 25, so it will be 1,50,000 total number of hours. 1,50,000 are the total number of hours. Further, output is also given that for every hour we have to manufacture 1 unit. So from every hour we get 1 unit. So 1 unit for 1 hour. So 1,50,000 hours, 1,50,000 units. Actual number of days are 27. Actual man hours per day is 6,300. So the number of hours will be 1,70,100. Actual hours will be 170,100 and the unit is 0.9 unit per hour. So it will be 1,53,090. Next is fixed overhead that are given straight away. That is 150 and 156. So anyone with any doubts or queries till now? Anyone with any doubts or queries till now? So now let's start with the calculation of variance. The first one is fixed overhead cost variance. Fixed overhead cost variance. Now, when talking about cost variance, it talks about under or over absorption of overheads. It talks about under or over absorption of overhead. So 1,50,000 overheads were for 1,50,000 units. And my actual production is 153.90. So this is what my absorbed overheads minus my actual overheads. My actual overheads are 1,56,000. So 1,50,000 खर्चा होता है 1,50,000 units से. So 1 unit is the standard rate per unit. So how many units we are actually manufacturing? 153.90. It means how much should be my overheads? 1,53,090. And my actual overheads are how much? 1,56,000. So 2,910. Extra, so we call it as adverse. 2,910. So these are my absorbed overheads minus actual overhead. So we can say it is under absorption of overhead. So 2,910 is what my fixed overhead cost variance adverse. Next is fixed overhead expenditure variance. Very easy. See, the name itself says fixed. It means the overhead remained fixed irrespective of production. So how much is the variance due to change in expenditure? How much we were supposed to spend? 1,50,000. The amount what we have actually spent is 1,56,000. How much extra we are spending? 6,000. It is adverse. Next is fixed overhead volume variance. Anyone with any doubts till now? Yes, guys. Next is fixed overhead volume variance. Yes, any doubts? Prince, Pooja, Gayatri, Amar, Shravya. Mehak, any doubts? So this is fixed overhead cost variance, that is 150 overheads for 150 units. So one for 153.90 units, how much will be my overheads? 153.90 minus my actual overheads are 1,56,000. So how much extra? 2,910. Expenditure variance, straight away the name itself says it is fixed. It remains fixed irrespective of production. So the overhead should be 150 and the actual overheads are 156, so 6,000 adverse. Now, next is volume variance. Volume means what? Units. The variance due to change in units. Now, guys, do pay attention. How much units we were supposed to manufacture? 1,50,000. How many units we actually manufactured? 1,53,090 units. So how many extra units we manufactured? 3,090. So since we have manufactured 3,090 units extra, so it's a very good sign for the company. We'll apply the rate what? See, this is unit, so we'll apply the standard rate per unit. Standard rate per unit will be how much? 1,50,000 divided by 1,50,000. This will be into 1. So it will be 3,090 favorable. See, herein very important, guys. Whether the variance is favorable or adverse, it's very important. You have to understand. See, you can't apply the formulas every time. So, how many units we were supposed to manufacture? 150. The units we have actually manufactured is 153.90. That is, we have manufactured extra 3,090 units. So, it's a good sign for the company. Now we have to apply the rate 1 per unit. So, this will be 3,090 favorable. So again, 6,000 adverse, 3,090 favorable will be equal to 2,910. So expenditure plus volume will be what? Cost variance. Expenditure plus volume will be cost. Now next is fixed overhead calendar variance. Calendar means what? Days. Fixed overhead calendar variance means what? Calendar talks about what? Days. So how many days we were supposed to work? 25 days in a month. How many days we actually worked for the company? 27 days. 2 days extra we worked. So it's a good sign for the company or bad sign for the company? Yes, waiting for your opinion. It's a good sign for the company or bad sign for the company? Very good, Gayatri. Arun, incorrect. Rest everyone correct. So it's a good sign for the company. Arun, you are thinking about the efficiency. I'm not talking about efficiency. I'm just talking about the number of days. We were supposed to work for 25 days. We work for 27 days. 2 days extra we work. So it's a very good sign for the company that workers are working extra 2 days in a month. And two, we have to apply the rate per day. See, herein it was unit, so we have applied the rate per unit. Here it is days, so we'll apply the rate per day. That is 1,50,000 divided by 25. So it is 6,000 rupees per day. So this will be 12,000 favorable. Just give me a minute. Now moving towards the next part, that is fixed overhead capacity variance. So volume was units, calendar was days. Capacity is what? Hours. Now our capacity was for 1,50,000 hours and we worked for 170,100 hours. So we can say 20,100 hours extra we have worked. But very important, guys, 1,50,000 hours were for 25 days and 170,100 hours are for 27 days. So we have to give the impact of the number of days to calculate the hours variance or capacity variance. So I'm writing the explanation also for your reference so that you might not get confused, and for future reference also you can use this language. We have the capacity of how many hours? Of how many hours? See, 1,50,000 hours are in 25 days. So in 27 days, how much was your capacity? We have the capacity to work for, we have the capacity of 1,62,000 hours in 27 days. Or in 27 days, my capacity was of 1,62,000 hours. So we have the capacity of 1,62,000 hours in 27 days. However, we work for how many hours? 170,100 hours. That is how many hours extra above our capacity? That is 8,100 hours above my capacity. 8,100 hours above my capacity. So it's a good sign for the company or bad sign for the company? Yes. Good, Pooja. Very good, Gayatri. Very good, everyone. Yes, Amar. Yes, girl. Yes, Avjeet. So I repeat again, our capacity was to work for 1,62,000 hours in 27 days. But in 27 days, instead of 162 hours, we work for 1,70,100 hours. That is 8,100 hours above my, 8,100 hours above my capacity. So it's a very good sign for the company. So 8,100 hours into, we have to apply now the rate per hour. That is 1,50,000 divided by 150. So that is 1 per hour. So this will be 8,100 favorable. Very important. It is favorable or adverse. That is important. So you have to understand the question and then only you can write down the answer. So this is all what about capacity. Now moving towards the last part. Fixed overhead efficiency variance. Now efficiency, the name itself says that whether we worked efficiently or not. So see, 1,50,000 units should be manufactured in how many hours? It means one unit should be manufactured in how many hours? 1 hour. Actually, we worked for 1 lakh. Actually, we manufactured 153.90 units. So it should have been completed in how many hours? But to manufacture these 153.90 units, we consumed how many hours? So it means the work was supposed to be completed in 1,53,090 hours, but the work was actually completed in 1,70,100 hours. So how many hours were my inefficiency? The work was supposed to be completed in 1,53,090 hours. However, I consumed 170,100 hours. That is 17,010 hours was my inefficiency. So this variance will be adverse. 17,010 hours is what I'm just writing it for your reference. Inefficiency. Into, we have to apply the rate per hour, that is 150 divided by 150, 1 per hour. So this variance will be 17010 adverse. So this is all what about efficiency variance. Again, calendar plus capacity plus efficiency will be volume. Volume plus expenditure will be cost. Anyone with any doubts or queries? I have written the explanation also. I have just not simply solved the question. See, these two parts are tricky. Many of the students face problem with capacity and efficiency. So I have explained this and I have written the explanation also. That 1,50,000 units, 1,50,000 hours. It means one unit should be completed in 1 hour. My actual production was 1,53,090 units. So the work should be completed in 1,53,090 hours only. However, we consumed how many hours? 1,70,100 hours. That is 17,010 hours is my inefficiency. So that's why this variance will be adverse. Anyways, I request you guys to copy this explanation, please. And anyone with any doubts or queries, you guys can post your queries. Calendar plus capacity plus efficiency will be volume. Volume plus expenditure will be cost. Anyone with any doubts or queries? See, guys, before proceeding for the advanced question, I want you guys to be thorough with the concepts. The concepts are the key. What I have observed that many students try to solve variety of questions without proper concepts. So no point, guys. So first of all, focus on the concepts. Once you are thorough with the concepts, then start with the advanced problems. So we are done with this part. Now let's take one question on variable overhead. Thereafter, we'll go for a break. And after the break, we'll be discussing few questions on missing figures. See, again, you have to, if you find a question on variable overhead, you have to just convert that question into this tabular form. Now, very important for variable overhead, only three figures are relevant. That is hours, units, and variable overhead. If the days are given, you have to ignore. So let's say hours are given 30,000, 33,000. Units are given, let's say 30,000, 32,500. Variable overheads are given, let's say 60,000 and 75,000. So information, only 3 points are required to calculate variable overhead variances. Apart from this, if any idle hours are given or if anything related to days is given, you have to simply ignore. So let's start with the variable overhead variances. The easiest part of the chapter, variable overhead variance. So variable overhead cost variance. Just like fixed overhead cost variance, variable overhead cost variance also talks about under or over absorption. So 60,000 overheads for 30,000 units. So for 32,500 units, how much should be my overhead minus the actual overheads are 75. So it will be 10,000 adverse. Again, it's the case of under absorption of overhead. These terms under or over absorption, I discussed. In fact, one of the faculty must have discussed also that what is under or over absorption. Still, if you have any doubts, you can check my recorded session. Even I have taken few sessions on overheads. Next is variable overhead expenditure variance. Expenditure, now see, fixed overhead we would have calculated directly, but variable overhead keeps on changing. So we have to give the number of impact of number of hours. So 60,000 overheads for how many hours? 30,000 hours. So for 33,000 hours, how much should be my overheads? Minus the actual overheads are 75,000. So this will be 9,000 adverse. 60,000 overheads for 30,000 hours. So for 33,000 hours, 66,000 should be my overheads, whereas actual overheads are 75. So it will be 9,000 adverse. Next is variable overheads. Efficiency variance is also just like fixed overhead. See, efficiency and cost will be same variable and fixed. So there will be a change in variance that is only in the expenditure variance. So 30,000 units, 30,000 hours, 1 unit, 1 hour. So for 32,500 units, we should have taken 32,500 hours. However, we actually consumed how many hours? 33,000 hours. So 500 hours is what my inefficiency into the rate per hour is 2. So it will be 1,000. Again, expenditure plus efficiency will be cost. So this is all what about variable overhead. We are done with variable overheads also. If you guys have any doubts or queries in material, labor, variable overhead and fixed overhead variances, you guys can please speak to me. I'm here to address all your queries. I hope you are all are thorough with the concepts. Yes? Anyone with any doubts? Yes, Garv, Arun, Khushi, Avjeet, Prince, Mac, Shravya, Gayatri, Amar. Anyone with any doubts or queries? Yes, Khushi, Garv, Arun, any doubts? So fine, guys. Let's take a break of 15 minutes. I'll be back after 15 minutes with few questions on missing figures. In the meanwhile, I request you guys to revise material variances because I'll be discussing the questions on material variances of missing figure. The questions are available over the portal. I have uploaded the notes, so you can download the notes in the meanwhile. Edwin sir, are you there? Please put the break. I'm live now. Okay. Welcome back, friends. So now let's start with few advanced questions. I request you guys to please open the material what I have provided. I'll be starting from question number 2, RTP May 2025. I'll be starting from question number 2, RTP May 2025. I request you guys to open the material. RTP May 2025. So compute the missing data indicated by the question marks from the following, wherein the standard price is given, actual price is given for the two types of raw material A and B. Standard input in kgs is given, actual input is given. Material price variance we have to calculate, usage and cost we have to calculate. Material usage variance of raw material B is also given. Sorry. Material mix for both the product together, it is 45 adverse. So let's start with this question. Now see, the data is given. We'll arrange it in the tabular form. So quantity, price and amount. Quantity, price and amount. Two types of raw material, A and B. Standard price is given, that is 12 and 15. Actual price is given, that is 15 and 20. I'm just writing down the figures that are given in the question. Standard input of A, it is 50, it is given. And actual input of B is given, that is 70. So this is the data that is given. Now the first information that is given is material usage variance for product B and material mix variance for both the products. So let's start with the material usage variance part first. Now, usage variance is what the quantity we were supposed to use minus the quantity, actual quantity into actual price. So, standard quantity minus actual quantity into standard price. This is how we calculate material usage variance. So, for B, it is 300 adverse is equals to standard quantity of B minus 70 into 20. Standard quantity of B, let's call it as X. Let's call it as, or just let it be standard quantity of B minus actual quantity of B into standard price, that is 15, sorry. Standard quantity of B minus actual quantity of B into standard price. So this will be 300 divided by, so the standard quantity of B will be 50. If we'll solve the equation, it will come to standard quantity of B will be 50. So this equation is done. So herein it will be 50, 50 plus 50, 100. This will be 600. This will be 750. And this will be 1350. So this data is done now. Now the question is how to calculate this. That is very important. There is no material cost variance in aggregate is given. So the point is how to solve this question. Any idea, guys? Yes. So let's start with mix variance. As Gayatri mentioned, let's use material mix variance. When talking about material mix variance, it is standard mix minus actual quantity into standard price. Now we don't have the total input. So let's assume it as X. So actual input will be 70 plus X. So this 70 plus X should be in the ratio of 1:1. This will be my standard mix. What will be my standard mix? As discussed also, 70 plus X should be in the ratio of 50:50, that is 1:1. So 70 plus X should be in the ratio of 1:1. So that will be my standard mix. So see, for A and B, 70 plus X is the total input. 1:1 means what? Into 1/2. Similarly, for B also, it is 70 plus X into 1/2. So this is what my standard mix minus actual quantity is what? X and 70. Multiplied by standard price, that is 12 and 15. If we calculate the total, we will get the value of X. And this should be equal to what? 45 adverse. So let's start. So this will be 35 plus 0.5X. So let's open the brackets. 35. 1 divide 35 plus 0.5X minus X multiplied by 12 plus again 35 plus 0.5X minus 70 multiplied by 15 should be equal to minus 45. Minus 45 means 45 adverse. So 35 into 12, it will be 420. 0.5x minus x, it will be minus point. See, minus 0.5x minus x will be 0.5x. 0.5 into 12, it will be minus 6x plus. Now see, 35 minus 70, it will be minus 35. So 35 into 15. So this will be minus 525 plus 7.5x is equals to minus 45. So this will be 1.5x is equals to 60. The value of x will be 60 divided by 1.5. So this will be 4. So we have got this value of x, that is 40. So 70 plus 40, it will be 110. This will be 600, 1400. That's it. So this is the solution now. Once we have calculated these values, we can easily calculate the variances. Anyone with any doubts or queries, you guys can speak to me with any doubts or queries if you have. I'm done with the explanation. The point is, herein we have first used material usage variance to calculate the value of B, and then with the help of material mix variance, we have calculated the value of A. Anyone with any doubts or queries? I request you guys to copy the explanation, please. Yes, any doubts, Gayatri, Pooja, Mehak? Let's start with one more question. Question number 4, that is RTP Jan 2026. Question number 4 from RTP January 2026. So let's start with the question wherein a company produces a product X using raw material A and B. The standard mix of A and B is 1:1, and the standard loss is 10% of the input. You are required to compute the missing information indicated by question mark based on the data given below, wherein standard price is given, actual input is given, actual output is also given. So the actual output we have to calculate, actual price we have to calculate it, standard input we have to calculate, material yield variance that is given for both the products, mix is given, mix we have to calculate, usage price we have to calculate, cost variance is given for product for raw material A, and in total it is also given. So it's a very good question in fact. So let's start with the question. In the meanwhile, I request you guys to read the question once again. So two types of raw material, A and B. Since the mix is given, that is 1:1, so we can say 50%, 50%. So 50, 50, input will be 100. Normal loss will be 10% and output will be 90. This is the budgeted data given. When talking about the standard price, it is 24 and 30. Now, standard price is 24 and 30. That is given. Actual input in kgs is given for product B. That is 70. Actual price of A is given, that is 30. That's it. So this is the data that is available with us. Now we have to start with the question. One second, guys. So now let's start with this question. Now the point is, the key is how to start the question. Because see here with the straight figures, we have not been able to calculate anything. Any idea, guys, how to start the question? Yes. by using material cost variance. Very good. Anyone else with any idea or opinion? So let's start. Material cost variance is equals to standard quantity into standard price minus actual quantity into actual price. Now, material cost variance is given. Yes, for A it is 0, so B it will be 1300 adverse. So let's start with 0 only. So material cost variance of A is given as 0. So we can say 0 will be equal to how much? Standard quantity of A into standard price minus standard quantity of B standard quantity of A into standard price minus actual quantity of A into actual price is 30. So we can say 24 standard quantity of A is equals to 30 actual quantity of A. Or we can say standard quantity of A will be equal to 24. If it goes down, then 30 divided by 24, it will be 1.25 will be the actual quantity of A. Anyone with any doubts? Yes. I repeat again, when talking about cost variance, it is standard quantity into standard price minus actual quantity into actual price. So this is standard quantity of A into 24 minus actual quantity of A into 30. So we can say 24 SQA is equals to 30 AQA. So standard quantity of A will be 30 divided by 24 into actual quantity of A. So standard quantity of A will be equal to 1.25 actual quantity of A. So this is what we can make equation with the help of material cost variance. Now herein, material yield variance is given in the question, that is 270 adverse for both the products. Now what we used to do in material yield variance, that is the work should be completed in this much of input. However, we use this much of input into the weighted average price, right? What we used to do in material yield variance, total standard input minus total actual input into standard weighted average price. This is what we have learned during all the concept session. That is the total of, that is the quantity that we were supposed to use minus the quantity that is called as total standard input minus total actual input into the weighted average price. This is what we used to do while calculating material yield variance. Anyone with any doubts or queries in this part? So this is what we used to do in material yield variance. So herein, let's start with this, wherein material yield variance is 270 adverse. Right? Material yield variance is 270 adverse. So total standard input will be how much? Total standard input will be what? Standard quantity of A plus standard quantity of B, standard quantity of A plus standard quantity of B minus actual input will be how much? actual quantity of A plus 70 multiplied by, how we will calculate the weighted average price? Standard quantity of A into 24, standard quantity of A into 24 plus standard quantity of B into 30 divided by total quantity, that is standard quantity of A plus standard quantity of B. Anyone with any doubts or queries? Just guys, listen with patience. This is what standard quantity of A. This is what standard quantity of B. This is what actual quantity of A. So what will be the total? 24 into SQA plus 30 into SQB divided by, we will get the total divided by what? The total of these two, that is SQA plus SQB. So this is how we got the weighted average rate. And when talking about yield variance, we want what? SQA plus SQB total minus AQA plus 70. So this is what total standard input minus total actual input into the weighted average price. Anyone having any doubts till now? Yes, everyone. This is a very good question. It's a bit on the trickier side. Anyone with any doubts till now? Yes, Amar, Shravya, asking individually to everyone. Anyone with any doubts or queries? Garv, Khushi, Mehak, Pooja, Gayatri. This is standard quantity of A. This is standard quantity of B. So this will be 24 SQA, 30 SQB. Whole divided by SQA plus SQB, we will get the weighted average price. Yes, anyone with any doubts? Now see guys, my simple point, herein the standard mix is 1:1. It means what? Standard mix is what? 1:1. So it means since standard mix is 1:1, so it means what? Standard quantity of A will be equal to standard quantity of B. Since standard mix is 1:1, right? So it means what? Jitna standard quantity of A hoga, utna hi B hoga, because their ratio is equal, right? Therefore, we can say standard quantity of A will be equal to standard quantity of B. So what we can do is, instead of standard quantity of B, we can write standard quantity of A also. Both are the same thing. I repeat again, since standard mix is 1:1, so standard quantity of A will be equal to standard quantity of B. So therefore, we can say 270 adverse is equals to SQA plus SQA minus, I'm just writing the same for your reference, minus actual quantity of A plus 70 multiplied by SQA into 24. SQB will be what? SQA only. So multiplication I'm doing here only. SQA into 24 plus SQA into 30 divided by SQA plus SQA. I'm just replacing SQB with SQA because the standard mix is 1:1. So SQA will be equal to SQB. So let's simplify it now. 270 adverse is equals to SQA plus SQA will be what? 2 SQA minus 70 plus AQA. multiplied by, see, 24 plus 30, that will be 54 SQA, divided by 2 SQA. 30, see, 24 SQA plus 30 SQA, that will be 54 SQA, divided by 2 SQA. SQA plus SQA will be what? 2 SQA. So this will be what? 27. 54 divided by 2, it will be 27. Now let's start. See, it is adverse. It means what? It will be minus. So minus 270 is equals to 2 SQA minus 70 plus AQA whole multiplied by 27. Now this 27 will go down. So this will be minus 10 is equals to 2 SQA minus 70 minus AQA. I'm just opening the brackets now. Now guys, very important guys. See here with the equation number 1, SQA is equals to 1.25 AQA. SQA is what? 1.25. Since we can say substituting the value of equation 1, what is SQA? It is equals to 1.25 AQA. So minus 10 is equals to 2 into 1.25 AQA minus 70 minus AQA. So it will be minus 10 is equals to 2.5 AQA minus 70 minus AQA, or we can say 60 is equals to 1.5 AQA, or we can say AQA is equals to 40. It's just a equation, nothing more than that. Now very important guys, we have got actual quantity of A as 40. Guys, do make a note of it. We have got, anyone having any doubts till now? Yes guys, there are two important points. First point is this, where in standard mix, this point is very important. This is the first point, and second point is the substituting the value of equation 1. Yes, the question is a bit on the trickier side, but you have to be thorough with the concepts, and plus practice is the key. Now we have got the actual quantity of A, that is 40. So 4 3s are 12. This will be 1200. Very important. 40 we have got. So 4 3s are 12, 1200. Now see, the cost variance of A is what? Let me check the question. The material cost variance of A is what? 0. So it means this will also be 1200. As the material cost variance of A is 0, that is 1200 minus 1200 should be 0. So this will also be 1200. So we will be able to calculate the standard quantity of A. That will be 1200 divided by 24. So this will be 50. See, first we have calculated this. Second, we have calculated this. Third, we have calculated this. Now, very important, I repeat again, we have got this value 40. So 40 into 30, it will be 1200. Okay. Now, since the cost variance is 0, so the actual cost of A will also be 1200. So 1200 divided by 24, it will be 50. Now, very important, the standard quantity of A is 50. So standard quantity of B will also be 50 because the standard mix is 1:1. So this will also be what? 50. So this will be 100. This will be 1500. Now here The cost variance of B is what? 1300 adverse. The cost variance of B is what? 1300 adverse. So the cost will be 1300 more than that. So 1500 plus 1300, this will be 2800. So this will be the fifth figure. 2800 divided by 70. This will be 40. This will be the sixth figure. Now we can easily calculate. This will be 4000. This will be 100. So the key was the calculation of this 40. I repeat again. After calculating 40, 4 3s are 12, 1200. Now since the cost variance is 0, so the standard cost of A will be 1200. We have the price, so we will be getting the quantity of A. Now, since the standard mix is 1:1, so quantity of A is equal to quantity of B. So 50, 50 into 30, 1500. Now, the material cost variance of B is 1300 adverse. It means the actual cost is 1300 more than A. So it will be 1500 plus 1300, 2800. So this is all what about this question. Yes, it was a bit on the trickier side. I hope you are thorough with this part. Anyone with any doubts or queries, you guys can please post your queries. I request you guys to copy the solution. Do you guys want me to discuss this part again? Entire question. If anyone with any doubts or queries, you guys can speak to me. I can discuss this question once again. Yes, any doubt, Mehak, Pooja, Gayatri, Avjeet, Garv? I understand the question is a bit difficult and tricky, and you need to practice these kinds of questions. If the paper is on the trickier side, yes, examiner do ask these types of questions. Yes, Pooja, Gayatri. Mehak, any doubts? No worries, you can copy the solution. That's okay. Giving you 5 minutes time. I'll not say the question is easy. The question is on the trickier side. But again, these types of questions, sometimes when the paper is on the trickier side, examiner do ask these types of questions also. Yes, Mehak, I hope the concepts are, you are thorough with this question. Done, Gayatri? Yes, it's easy. The point is you have to focus on the concepts. The concepts are the key, Mehak. So anyways, guys, I'm done with the explanation for today. As I told you, there is no alternate of hard work. Focus on the concepts. Standard costing is all what about concepts. Practice as many as possible questions as you can. Variety of questions are available. Variety of questions are available in the study material, past RTPs, MTPs, past examination. The material is available over the portal. You can just simply go to ICAI website and check the questions are available. So try to solve as many as possible question in writing. if you are done with all the past 5 attempts, RTPs, MTPs, and practice manual and study material based question, I think no one can stop you from scoring 75% plus marks in costing. So work hard, focus on concepts, and trust me, guys, you'll feel very comfortable during exams while writing the paper. So thank you so much for your time, patience, and for active participation in the session. There is one more session of mine that is of marginal costing. Again, a very important chapter. You will find a question of marginal costing in every attempt. So I request you guys to come prepared for the coming session. Whatever the doubts you have, be ready with your doubts. The sessions are conducted by ICAI, especially for your queries and few questions that we need to discuss. So that is the key. So for the students like who are attending the session for the first time and they don't have any idea about the chapter, you won't be able to understand anything. The key is these sessions are revisionary classes. So come prepared for the session. That is the key. Anyways, guys, thank you so much. God bless you. See you day after tomorrow. Till then, take care. Thank you so much. Admin, sir. Thank you.